Does it feel like your auto insurance is draining your wallet every month? Well, you're not alone. Many people stare at their bills wondering, why am I paying so much for this? But here's the thing, your premium isn't just a random number. It's actually a reflection of specific factors that insurers use to assess risk. Today, we're pulling back the curtain to show you exactly why your auto insurance might be so high, and later in the video, I'll give you actionable tips to start lowering it. Let's get into it. Now, you might be wondering why you should trust me. I'm an insurance nerd, a licensed property and casualty adjuster with over 8 years of experience. I've helped thousands of people decode their policies, navigate claims, and save money on their premiums. Whether you're feeling overwhelmed by your insurance bill or just curious about how it works, you're in the right place. Now, a quick disclaimer before we start, this video is for informational purposes only. It's not legal advice, and your situation may vary depending on your state and policy. Always consult with your insurance carrier or agent for specific guidelines. Now, stick around to the end because after we break down the common factors driving up your rates, I'll share some powerful strategies to help you lower them without sacrificing the coverage you need. Let's dive in. First up, your driving record. If you've had accidents, speeding tickets, or DUIs, insurers see you as a higher risk, and that risk translates to higher premiums. Even one minor ticket can increase your rate by up to 20%. A DUI? That could double or triple your bill. But it's not all doom and gloom. Most violations drop off your records after 3 to 5 years, depending on your state. Keep that in mind as we talk about strategies to lower your rate later in the video. Yes, your credit score plays a major role in your premium. Insurers use it to predict the likelihood of filing a claim with the idea that people with a lower score are more likely to file. This practice isn't allowed in every state, but in many, it's a key factor. For example, a driver with a good credit score may pay $1,200 annually, while someone with a poor credit score could pay closer to $2,000 for the same coverage. That's a significant difference. Now keep in mind, later I'll share on how improving your credit score can translate to lower insurance costs. Your car isn't just a mode of transportation, it's a major factor in your insurance rate. Insurers look at the cost of repairs, theft rates, and safety features. Luxury and sports cars tend to come with higher in premiums because they're expensive to repair and more likely to be stolen. On the flip side, practical vehicles with strong safety ratings, think mid-size sedans or compact SUVs, are usually cheaper to insure. But don't worry, I'll show you how to make smarter choices with your vehicle later on. What kind of coverage do you have? If you've opted for full coverage, including liability, collision, and comprehensive, it's going to cost more, especially if you have a low deductible. For older cars, it might not even make financial sense to have full coverage, and adjusting your policy could save you money. We'll go over how to assess your coverage needs a little later, so don't miss that part. Where you live plays a big role in your premium. Urban areas tend to have higher rates because of more accidents, theft, and vandalism. Even your specific zip code can affect your rate significantly. But location isn't something you can easily change, right? Don't worry, I've got tips for mitigating location-based costs later in the video. Young drivers, especially those under 25, are statistically more likely to get into accidents, which means higher premiums. On the other end of the spectrum, older drivers, typically those over 65, might also see their rates go up again as insurers factor in slower reaction times. Now, while you can't change your age, there are discounts and programs specifically for these age groups, and we'll cover those shortly. Lastly, external factors like inflation, supply chain disruptions, and rising medical costs are making insurance more expensive for everyone. Even if you're a perfect driver, these broader trends are likely impacting your rates. But don't worry, there are still ways to lower your premium even in this challenging environment. Let's move on to those strategies now. If you've had a rough driving history, time is your best friend. In the meantime, consider enrolling in a defensive driving course. Some insurers offer discounts for completing these programs. And for smaller violations, look into accident forgiveness programs that can help keep your rates steady after a single slip-up. If your credit score is dragging you down, start by paying bills on time, reducing your debt, and checking your credit report for errors. Even a small improvement can make a big difference. Some insurers reassess credit annually, so the sooner you start improving, the sooner you could see results. If you're driving an older car, it might be time to drop collision or comprehensive coverage. A good rule of thumb? If your annual premium for these coverages is more than 10% of your car's value, it's probably not worth it. Instead, focus on maintaining high liability limits to protect your finances. Insurers price risk differently. This means that the same driver could get wildly different quotes from different companies. Use comparison websites or work with an independent agent to shop around. Even if you'd like your current insurer, it's worth asking if they'll match a competitor's rate. Insurers don't always advertise their discounts, so you need to ask. Here are some common ones. First, the Good Student Discount. Perfect for drivers under 25 with strong grades. Next, the Bundling Discount. Combine your home and auto for savings. Next, Telematics Programs. This allows your insurers to track your driving habits for potential savings. Even small discounts can add up, so take the time to explore all of your options. If location is driving up your cost, counter it by installing anti-theft devices or parking in a secure location like a garage. For low-mileage drivers, ask your insurer about pay-per-mile policies, which can significantly lower your premium if you don't drive often. Switching insurers frequently can actually hurt your insurance score, and metrics some companies use to evaluate loyalty and risk. Instead, aim to make changes thoughtfully and strategically while maintaining continuous coverage. So why is your auto insurance so high? It could be your driving record, credit score, car, location, or even your coverage choices. But here's the best part. Most of these factors are well within your control. By driving safely, improving your credit score, reassessing your coverage, and asking the right questions, you can take charge of your premium. As a quick reminder, always consult with your carrier or agent to ensure any changes are right for your situation and policy. Now it's your turn. Which of these strategies are you going to try first? Let me know in the comments and feel free to share any tips that have worked for you. Don't forget to like this video and subscribe for more insights into making insurance work for you. Thanks for watching, and as always, drive safe and stay covered. We'll see you in the next one.